November. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning.
How you doing?
Yeah, not bad, mate. Markets have taken a bit of a plunge again overnight after the attempted recovery yesterday.
Indeed, they have. All
Uh,
quite interesting. Bit choppy out there, which is, well, makes things a little bit more interesting, doesn't it? Obviously, the reason behind it isn't particularly great. I think it's being fueled by the comments from the Moderna CEO, who told the Financial Times that the existing vaccines will be less effective at tackling Omicron than earlier strains of COVID-19, and it may take months before pharmaceutical companies can manufacture new variant-specific jabs at scale. Let's not
mm.
forget the Moderna CEO is a businessman at the end of the day. So obviously he's going to love new variants, isn't he?
Yeah, it probably is, but I suppose if he's a businessman shareholder, wouldn't he be sort of like saying, "Yeah, we've got this. We're going to smash this. It won't take us long," and then sort of drag it out a little bit, get the share value up, and
Well,
offload a
that seems
few.
to
And
be the case. Moderna and BioNTech are both working on a vaccine apparently that's going to be adapted to the new variant, and their timeline suggests shots may be ready early next year. It's almost like they had
right,
it ready to go.
okay. And this is the way of the world from now on, isn't it? Just that every 3 months we'll have another jab in our
Just keep
arm.
pumping us in with something different. Yeah.
Yeah, I'd like to sort of like
Then
take
they'll
the
be able to, because when we sort of, stop talking about it and it's just normal, then that's when they'll slip the microchip in.
yes, Joe, love it, love that one, the microchip.
Yeah, fantastic,
Yeah.
eh? Obviously, as a result of the declines and the threat of the new variant, we've also had commentary from the Fed chair, Jerome Powell. He said that the Omicron variant poses risk to both sides of the central bank's mandate to achieve stable prices and maximum employment. He didn't discuss specific monetary policy actions or the possibility of changing the pace of tapering of its assets. He is due to speak again tomorrow, and then it will be all eyes on the 15th of December when is the next FOMC statement and conference. So we'll keep an eye out for his comments tomorrow and see if we get any further clues about the tapering of assets. The other news out yesterday on the corporate front, which sort of slipped by many, was that the Twitter CEO, Jack Dorsey, um, is exiting Twitter, and he's keeping the job in-house. He's named the new CTO, the new CEO as former CTO Parag Agrawal. He's also going to be the youngest CEO in the S&P 500, edging out Meta's Mark Zuckerberg. So he's going to be straight into the fire, dealing with the political scuffles that Twitter is already facing, such as its criticism over banning former President Donald Trump, amongst some other bits and pieces as well. That's pretty much it on the news front. I think it would be um, right for us to get stuck into some charts, Steve, just because obviously we are opening up with a bit of volatility today, and we've got 9 minutes or so before European markets open. So
Yeah.
let's get stuck in.
Well, yes, we've had, as you can see from the charts on the
Oh,
weekly
that's
chart,
my
we
chart.
broke.
Hang on.
Oh,
There we go.
I can't see the screen yet. Okay, so we broke below this trend line. I'm going to remove this trend line now. We've got support coming in FTSE at 69.60. We've been down and flirted with that today. You can see the overnight price act. Oh, sorry, this is the weekly chart. So over the last couple of days, you can see the price action. We opened up around here Sunday night, Monday morning, and rallied higher aggressively into about a 50% retracement of the previous week, a little bit more in the FTSE's case, but 50% on the rest of them, or at least the daily chart on from Friday. And we have posted a lower low, hello, this morning, and yeah, 69.60 for me is the support. Below that, 68.10 is the really key number of the support in FTSE for two reasons. The dip buying that happens here, we can see it on 3 occasions here. Also, we got this trend line. We've got 3 points on the trend line, so it's a decent trend line. I know it would be nice to see another point somewhere around here, but 2 points close together, and that should prove a bit of a hurdle for FTSE to overcome. but we shall see if it plays out. On actually, let me just drill down to the daily on the FTSE and just show you what's happened basically overnight. You can see price action tried to get back above the 50%, failed, and we're engulfing that price action. We have been down lower. We've been down to 69.75 in FTSE and have rallied back over the last couple of hours. The same in DAX, engulfed the previous day's price action, so that's pretty negative. Support coming in at 14,827, so that's the equivalent level in FTSE for the dip, the 68.10 level. Yeah, but we're engulfing and closing lower. 15,000, obviously a little bit of a psychological level around there. We've been either side of that this morning and looking to push lower still feels pretty bearish as we approach the 8 o'clock. The 8 o'clock open, we should see some decent volatility in here. Maybe with markets, live markets hitting the actual exchange itself, and maybe having a knock-on effect to these CFDs that we trade. Dow has also given up yesterday's gains that we saw. We're trading just above the price where we opened on Sunday night, Monday morning, and yeah, 34,750 we're trading now. We have been down to 34,500. So I expect, I do have the feeling, I mean, we're above the 50, sorry, we're below the 50-day moving average. We've smashed through it, obviously, on Friday, and we've maintained price action below that. So yeah, bit of a sort of reversal at the moment, or sorry, a correction, reversal on the short-term chart, but a correction on the daily chart. Not quite a reversal yet. As you can see, we've got a long way to go before anything like a reversal happens. Nasdaq, similar sort of price action again. However, the sell-off hasn't been quite as bad. You have the tech stocks holding up a little bit better on Nasdaq. S&P's has been under pressure. That's been down to just in front of yesterday's low and Friday's low, 4,582 we've got there. So a break of there opens up the downside. We've got 38.2% Fibonacci retracement coming in at 4,563, a 50% retracement. The 50-day moving average sits down here though, 4,547. If anyone's interested, that should provide a little bit of support.
In line with the fib.
Yeah, it would
Lovely.
be nice. Yeah. So Aussie 200 did have a spike higher last night. I think we actually nailed a short position on that on the intraday trade ideas, which was quite nice. That's offset a few of the losses we've seen in trying to sort of like catch the knife that's falling in the indices. But you can see price action again formed a lower low from yesterday's price action, but hasn't quite managed to break Friday's low of 71.54. So all eyes on that again as the market develops this morning. The real one that's has got me going is this 14,500 level in the China 50, and again a bearish engulfing candle has engulfed all of yesterday's price action, and again looking like the pressures on this morning. So all the same, Hang Seng negative has taken out lows that we've seen back in September, and we're trading below there, so that's even more negative than the rest. 2,300 is the next level of support. Below there we'll see some more horizontal support, but 21,000 is key on that on the Hang Seng. Nikkei under pressure again. The 50-day moving average from Friday was smashed through, and we're trading well below it now. On the Nikkei, we've got support coming in around about the 27,000 level, about 500 or 600 points lower than we are now. Taking a look at cryptos, cryptos had a bit of a spike. Let's take a look at the 4-hour chart. I was analyzing these this morning. There's a YouTube video on the cryptos this morning, small one covering the sort of like 4 ones that we cover. Bearish channel really that is dominating. We did see prices spike above it over the last couple of days, however stalled and reversed, shooting star candles, rejecting the advances, and we're back into the channel almost as far as the Bitcoin's concerned. So support this morning coming in at 56,000. A break of there should open up a retest on these levels that we saw at the weekend around about the 53,500 level. MACD crossing over on Bitcoin. Ethereum was capped by the downward trending resistance line, which is a nice trend line here, 3 or 4 points, and we've got a 5th point now, forming a evening doji star formation if we do get this the next 4 hours of price action. Sorry, the next, oh, it's up to 8 o'clock. So we're not exactly going to get what we want. If you see these evening star formations, you'd like to see this third candle of the formation projecting a lot lower and closing potentially below the previous upward candle, but it's still negative. So looking a little bit ominous for Ethereum also. Support should come in around about the 4,285 to 4,225. Ripple also, we can see this downward trending support line, which has hit on 5 occasions. So that's quite a key line. We formed a double bottom formation on the 4-hour chart. That's projected higher and hit target. We've also, this was a bit of a wedge. You can see it was a bit more, I think it was a bit more like that, but it looks like to be forming a channel more than a wedge formation. So I think we're pretty entrenched on the downward side across the board on cryptos. Cardano also reacted from 142 up to 164, and then bearish momentum has stalled. It has capped the move, and bearish momentum is leading to another drive lower. So this bearish channel dominating on cryptos. Taking a look at commodities. Crude oil, oh dear, doesn't look great, does it? We had this bearish channel, we've broken out of it on the Friday and have projected a lot lower. Let's take a look at the daily chart to see where we get support coming in. I think
so fundamentally, is the action that the world's oil-consuming nations took last week starting to impact as well, all starting to sort of roll into the chart, I guess?
Yeah, it is. And also, obviously, this coronavirus, the new variant, Omicron, which I'd sort of like thought, well, at least make it easy to pronounce, because that's the idea, isn't it? Delta,
Omicron,
alpha, beta. But quite a sort of like, I'll finish off with a little story about why it's called Omicron.
Okay, thanks.
And yeah, so the new variant obviously threatening to potentially shut down travel, shut down different countries, less demand for fuel, although actually if this weather continues, that might be offset by the cold weather that we're seeing across the Essex parts of Britain. But yeah, we've broken below there. This is we've been down to 78.6% Fibonacci retracement from the move from August all the way up to October. This really nice sort of like bullish channel, and we've seen the bearish. We did see a bearish channel. I think I drew it, yeah, on the 4-hour chart. But yeah, even looking at let's take a look at the weekly chart and really talk about what I've been talking about for a long while, this impulsive move. We thought this impulsive move had formed wave 3, 4, 5 here, and then correction. However, this continued higher. So the 5th and final wave topped out at $85. We're trading at $68. That is $17 away from the highs of this year. Yet petrol prices are still at an all-time, we feel like an all-time high at the pump. Something's really going on. However, we are sort of coming down to this previous resistance band here. We've got resistance now will turn into support all the way down to sort of $61 in this. But that's 1, 2, 3, 4, 5, 6th. The 6th week of negative price action. Only another 3 before. Well, that'll be around Christmas, won't it? Before we hit the bottom, maybe. So yeah, definitely pressure on. Oil had a little bit of a spurt up, thinking, here we go, safe haven. And then everyone remembers back to what happened last year when we thought oil was a safe haven. It turned out not to be. Sorry, gold. Yeah, I said oil, didn't I? Sorry.
Yeah.
Yeah, so gold under pressure, and really still has a little bit of work to do on the downside from levels we saw back in $1,677. We're hanging around $1,800. feels very pivotal at the moment. Resistance comes in at 18.15, support comes in at 17.80, below that 17.60, and below that 17.22 before the real support at 16.77. Still feels like we could flirt with that at some point over the coming months.
Cool. Thanks, Steve. So yeah, talking about safe havens, we'll look at the dollar, and that's trading quite heavily on the back foot today. It's down by 0.3% so far. So we've pushed above the upper end of this channel, but we've posted some pretty horrible looking red candles really in the last couple of sessions. So yesterday we didn't do an awful lot, posted a bit of a well, looks to be a bit of a reversal candle that's been backed up today with further selling. So looks as though we're heading lower. Doesn't really look like dollar's got much of a safe haven appeal despite the volatility that we're seeing in indices today, which is a little bit strange. If you look at the right hand side of the screen, you'll see my watch list of currencies, and it's actually euro that's doing a really good job today, pushing higher. I'll come on to how these look on the baskets in a moment, but in terms of dollar, I think we're going to see maybe a continued correction towards the support we've got at 94.74, which is highlighted by this blue line, which would also be the lower end of the channel. So for me, that would be a nice point for it to drop to, and then maybe we'll see some buying interest return. But ultimately, I do think we are going to see higher prices on the US dollar up to my eventual target at 97.68, and then above that up to 100. But for now, it looks like we're in a bit of a corrective phase, and the dollar doesn't appear to be liking the setback that we've seen in equity markets. So if we take a look at euro US dollar, that's looking pretty smart really over the last couple of trading sessions. A really big impulsive move there on the 26th. Yesterday we didn't do an awful lot, but we are moving higher yet again today. That's following obviously this quite sharp decline to the downside. So the next real reference we've got for resistance is up at 115.25, which will be a retest of this previous support, which should now act as resistance. So looking like we might see a bit of a continuation of a correction there in euro US dollar. If we take a look at cable, that's although up today 0.2%, still not looking great, certainly not looking as good as what we've just seen on the euro dollar side of things. Still trading in a bearish channel, hugging the lower end of that at the moment. We've got some resistance above at 133.53, which seems to be doing a reasonable job of capping the upside in the very short term. If we take a look at euro sterling, that's had a really nice move off of the lows. Lower end of the channel, we've got some support round here, which seems to have done a pretty good job at 83.80. And we've seen 4 consecutive days of gains now on that. So ultimately, I think prices will be capped on the upside, but we could potentially be in the process of forming a bit of a bottom there. A little bit early to call that, but certainly seems to have some pretty good momentum behind it in the very short term. In terms of the riskier currencies like Aussie and New Zealand dollar, they're getting a bit of a whack today. They are not really enjoying the volatility in equity markets. Aussie still continuing to probe this really important level we've got down here at 71.06. We have had a little bit of a look below this today, but we seem to be holding on to it for now. If you are a speculative trader, you've got a pretty good reference there for a support level, and therefore you can go with a pretty tight stop and maybe look to speculate on a push higher. But that obviously would mean that we need to see probably some improved appetite for risk, and therefore you'd be looking also for a bounce in things like equities this morning, which at the moment doesn't appear to be showing itself right now, but certainly something to keep an eye on. If we look at New Zealand dollar, US dollar, that was also quite interesting. Again, a big reference for support here. We have just in front of 68.00. We've seen a couple of attempts at trying to overcome this level on the downside yesterday and today, but still holding on, forming some hammer candles there as well. Again, could be a really interesting one from a risk reward perspective. You could be looking to buy here, tight stops below the lows of these candles and looking for a corrective bounce. But again, you need to see some improvement in risk appetite today. The other thing I wanted to show quickly was the basket. So these are sort of the more up-to-date versions of the other baskets that we've looked at, which are created by TradingView, so BXY, CXY, ZXY, etc. So what I've done here is created a synthetic one using all of the major 8 currency pairs and combine them all together to form a basket, basically. So the top basket we have here is the dollar, which overall looks pretty strong. As we can see, it's weakened a little bit here. But reason I brought these up is because we're actually seeing some strong moves in things like euro, which does, I guess, in some instances have some defensive qualities about it. But quite interesting here that we've seen this big move higher. Whether or not it's just a case of selling into strength, or whether it's something a bit bigger building, maybe a bit of a bottom potentially. The other thing that's interesting is Japanese yen. That obviously took an enormous whack over recent months. If we just scroll back a bit further on the chart, you can see how devastating this move lower has been, but appears to be finding some form. Still trading in a sequence of lower lows and lower highs. So unless we can overcome this resistance level, I think ultimately is a case of selling into strength. But as you can see, the Japanese yen is attracting some interest from the safe haven buyers. And we're also seeing that with Swiss franc. So this is a Swiss franc broken out quite convincingly above this resistance level here. Don't pay attention really to the levels because this is a synthetic basket that I've created, but in terms of assessing price action, I find it pretty useful. It's broken out above resistance, and clearly there is demand for the Swiss franc at the moment. And again, further indication that there is money shifting into safer haven assets in order to protect itself against the volatility that we've seen in financial markets over the last week or so. So that's it from me on the FX front.
Nice one, Joe.
Okay, so the guns ahead trades from yesterday. Steve, you had a 0.91R win on China 50. I had a half-hour loss on ASX. So collectively, we made a bit of money yesterday, but you're on a bit of form at the moment, Steve. 2 out of 2.
Not bad.
What are you fancying today?
Well, I can't do anything else but sell indices, and it's just about picking the right one to sort of like get some value out of it, I suppose. So I'm going to take a look at FTSE. You said dollar was weakening, didn't you?
Yeah.
So let's go with FTSE, which that'll have an impact on FTSE. And we just posted a bit of a hanging man candle. I know it's a bullish hammer here. This looks quite constructive, but looks like a hanging man candle here. I'm going to do a pretty tight stop on it. Getting short at 7,047.5, stop at 7,067.5. It's only a 20 tick stop, so it's not much at all. And looking to target 69. 67.5. What does that give us? That gives us a 4-to-1 risk reward on there. Actually, I might go a bit more aggressive on this, Joe. I might go 69, 27.5. Takes us all the way down to this next support line. Don't know where it's from, but it's on side already. So if you were listening to me, you've missed it.
Great advice, Steve.
So yeah, that's about it. That's what do you fancy, Joe?
I don't know really. I mean, just looking at this euro dollar situation, this is the hourly chart, and it looks like it's forming a bit of a rounding bottom here on the intraday charts, as you can see there, just crudely drawn on. It's breaking above this key high from the 26th. It doesn't seem to be slowing down, so I think I'm just going to go with it really.
Go with it, mate. Yeah.
Go with it. So going to target a move to 114.34. Current price 113.36. And let's get a nice tight stop so we can look for some decent R. So let's go 113.05. So basically 3R I'm looking for on that. Just a bit of a continuation higher. Going on nothing else other than how it looks over on the hourly chart, really.
Nice one.
Yeah, maybe a bit of head and shoulders there. Left shoulder, head, right shoulder.
I was going to say that, but I think I bore people when I see head and shoulders where there's just a body.
Yeah.
Right. I was going to tell you about Omicron. Why is it called
Omicron or Omicron?
Never you mind, mate. I pronounced it how I want.
Yeah.
So Omicron. Basically it's letters of the Greek alphabet. We had, everyone's thinking, well, Delta, surely Omicron is O. That can't be the last. That can't come after D in the Greek alphabet. However, there has been other variants that we haven't really sort of heard much about. So there has been other variants that have been named in between D and O. And the WHO, the World Health Organization, decided to skip a few. So we've had one variant called Lambda, one variant called Mu. They've decided to skip ahead and not name any variants Nu or Z, which is XI. Nu obviously sounds too much like the word new, so this is a new variant, not new variant. And Z is a common surname in China, so they didn't want to sort of like bring that into it and cause offence to cultural, social, national, regional, professional, and ethnic groups. So that's it. We're on O.
Thank you. Cool. Okay, data today that's due out that we need to be aware of. So 8:55, we've got German unemployment. The rate is expected to hold at 5.4%. At 10 a.m., we've then got Eurozone CPI. Price is expected to rise to 4.4% year on year in Europe. 2:45, we have the Chicago PMI. The index is expected to fall to 68.3. And at 3 p.m., we have quite a biggie out from the US, which is the consumer confidence figure, which is expected to fall to 111.8. It's also the last trading day of the month before we can start opening our advent calendars tomorrow. So I don't know if that will have any influence on the price action that we see in financial markets today, but often it can. So do be aware of that. And just be careful out there because it looks like we're set for another volatile day in financial markets.
So advent calendars have an effect on the market. Is that what you were just saying? Or
No,
you the last day of the
I think
month?
that's what I meant to say. I was just saying, highlighting that it is the 1st of December tomorrow.
Right, nice one.
Cool. Anything else to add, Steve?
No, nothing of note, not or worth. But yeah, we'll see you all tomorrow.
Yeah, cheers, guys. Bye.